Hello, thank you for joining the Victor H Investing live stream. I wanted to take time and take a look at the markets of what's been going on. There's been a couple interesting things that happened this week. There's been some short squeezing going on thanks to GameStop and Roaring Kitty showing up again. That was really interesting. We also had some economic data that came out that showed that inflation is not a big problem yet. It actually came in as expected, and it really calmed some fears around inflation. Overall, kind of assess what the sentiment is with the market and kind of just review where we're at. It's Wednesday, the market is closed. It's the 15th of May, right in the middle of the month. So far, the month's been a good one, and I wanted to review it. Also wanted to take a look at 3 stocks that I sold this week and the reasons for it, as well as the stocks that I'm buying into at this time. At any time, please ask questions. If there's a stock that you'd like to take a look at, please put it in the comments. Glad to take any question and look at any company that's publicly traded. As we get into the live stream, just a quick reminder that I'm an individual investor. And I don't recommend you buy or sell any of the stocks that I'm going to cover. And I don't provide any financial advice. It's just my opinions, my observation of the market, and specific to my portfolio and the things that I'm doing as an investor. Thanks everyone for joining. I appreciate it. We've had some really nice live streams, and what made them really fun were the questions and comments. Please, as you have done before, add your comments, any questions or any points that you'd like to make. Would love to hear that from you. All right, so the market ended today. Today was a really positive day. Stocks really went up. I think the sentiment was calm because the inflation report came in and the CPI came in as expected, and it continues to be. Inflation is lower than in previous years. If you recall, like a year and a half, 2 years ago, inflation was really bad. Now we're down to 3.4, 3.6. That isn't too bad. Ideally, it's around 2. But for now, we're kind of getting closer to the goal, which is very productive. So all that's good. The markets, if we look at the last month, the S&P is up 4.87, and the Dow is doing really well. The Dow has had a lot of positive days, and these are bigger companies. They're more stable. They pay dividends. The Dow's been really doing well, and the NASDAQ's done well, and the Russell has had a nice 30-day run. The Russell is made up of the smaller companies, and that is positive news for smaller companies. I've noticed that the Russell small companies have not done as well as the bigger companies. And I don't know if that's going to be, a trend that's going to continue, that the Russell continues to perform well. I would sure like to see that. I own some small, mid-cap companies, but we'll see. The data doesn't lie. In the last year and a half, 2 years, the Russell 2000 has not kept up with the S&P, has not kept up with the NASDAQ. So it's been better to own big companies, big stocks, as opposed to these small companies. The CNN, fear and greed index, I just like to look at sentiment, is the sentiment where everybody's really afraid. And last week when we looked at this measure, we were measuring fear, which was, I thought, constructive. Hey, everybody, let's pump the brakes on these stock prices. It's really hard to find a good deal on a stock these days. And it's really gone from fear to greed. And the reason for it is that prices continue to rise. We're setting all-time highs on the NASDAQ. And so we're back to a greed reading on the fear and greed index. It's be greedy when everybody's fearful. So must feel the opposite way to where the market's at. And as the market continues, to break all-time highs, I'm being careful not to overbuy. let's get some more cash going. Let's have a nice cash pile, because this is probably going to end like every other occasion. We're going to have some type of correction. Can't say that it's going to happen this month, next month, in 6 months, in a year, but it's going to happen, because corrections tend to happen every year. And they tend to happen when everybody thinks that everything's fine. And then boom, a sell-off occurs and we have a pretty good correction. So we'll see when it happens this year. So the core inflation came in at 0.3% month over month. Year over year, it's 3.6. And then year over year on the inflation rate overall is 3.4. So not too bad. I'm glad that it came in that way. I think if it would have come in really high, then it would have been a problem, because then investors would have begun to think, hey, is the Fed going to have to raise interest rates? At this rate, I think there's going to be maybe one rate cut toward the end of the year. And if the inflation continues to cooperate and go down, maybe more. All right. So we looked at the indexes. It's been a good week. Good week to hold stocks. Very good. Now let's talk about Bitcoin really quick. So Bitcoin, I'm a stock investor, and I'm conservative in my investments, but I also would say that my background, I've worked in technology, software industry, and so forth for quite a while, and understand technology, I think, probably as good as the average person, probably a little better. And so I understand Bitcoin and how it can be a store value, and how, it is a scarce item. Looks like XDiv is showing up here. Let me read his comment, and then we'll continue on. So XDiv, good to have you. Thanks for the comment. Although the markets are at their peak, there are some exciting companies that offer good opportunities. That's why it's difficult for me to build up cash. Very good point. I can understand that. And I agree. Every market's going to have some companies that are too good to pass up, very good valuations, or maybe they just have an exciting new technology or product that are a good investment. So I understand that. Josh Samuel, thanks for showing up. Victor, what is your thought about these stocks? NIO, Rivian. Okay, NIO and Rivian. Let's take a look at those. And then I'll give you, we'll look at the fundamentals, and then I'll give you kind of like my opinion on both. I'm more familiar with Rivian. NIO, I am familiar from it being in the news so much, but would love to talk about those too. And a couple more comments coming in. Looks like a duplicate comment. No worries. Jamie, can't believe the recent run of Coinbase. Yeah, it was below 200. Incredible. So I wanted just to kind of like put it out there, right? So I'm like invested primarily in real estate. That's like where most of my net worth is at. And then close to that is stocks. And that's like 80% of my net worth. Then bonds. And then I have cryptocurrencies. And it represents, cryptocurrencies are probably 3 to 4% of my portfolio. So it's a small part of my portfolio. But to me, it's fascinating. Bitcoin is considered the digital gold because it's a stored value. And it's just a way to invest in something that is going to be a scarce digital store value that you can invest in. And I've been investing in it for 5-6 years. So it's not like I showed up, last week and thought, hey, it's a good idea. And I can tell you, man, hindsight's 2020. I still remember buying coins when it was, $150 per coin, but I didn't dive in, head first. I was buying little amounts. Long and the short of it, it's been a really good return on this asset class. And it's really had a positive week. And if we look at this is year to date, but if we look at the 5-day, Bitcoin's just really doing well. And I think us moving from fear to greed whenever the market gets comfortable, Bitcoin rallies. It just takes off. It's interesting to see that. I haven't had to put a lot of money into I own Bitcoin and Ethereum, and I haven't had to add much because it goes up. It's gone up a lot. I think overall, I've more than doubled my investment. I think overall I've invested about 62,000. I've made upwards of $67,000 in profit. So the gains alone continue to increase that part of my portfolio. Not recommending you buy Bitcoin, but I would say that I would study it up. I always, I encourage, anybody continue to learn. I think Warren Buffett would even tell you he continues to learn. And rather than being afraid of it, because I hear a lot of investors like Jamie Dimon, he hates Bitcoin. He hates digital currencies. I think because JP Morgan doesn't really have a play on cryptocurrencies. So he doesn't like it because it can compete for mind share, where he wants his firm to always be dominant. And other people like Charlie Munger, the late Charlie Munger, he thought Bitcoins were like, ridiculous. And I get that. But at the same time, a lot of ETFs have come out doing really well. A lot of super investors are bought into Bitcoin. So I would encourage you to just study it up, understand it. And if it's not for you, it's not for you. But maybe just understand it and see what it's about. As I learn it, I'm comfortable putting a little bit of money into it, and the rewards have been good. So it's good to see Bitcoin thrive. All right, so I'm going to talk about some short squeezes this week, but I'm going to jump into looking at NIO and Rivian, and then we'll talk about the short squeezes after that. So Rivian is an electric vehicle company. They produce two types of vehicles. What we see on the road is a really cool looking truck and a really cool looking SUV. I think they look really nice. I'm located in California, Southern California, and the Rivian headquarters is less than 10 miles from where I'm sitting. So I'm familiar with the company. So we know them from the retail or, cars that you and I would buy. But really what they also are doing is they create these Rivian electric vans. And if you recall, these guys got investment from Ford and Amazon. Amazon wants to buy their vans that are EV powered. And I thought that was always a very good move. They would have a commercial business out of the gate as well as a consumer business. And because a consumer business could be expensive, distribution, all that stuff. But if you have like one customer, Amazon, and they order 10,000 vans, if not 100,000, not very expensive from a sales perspective. You just have to meet the schedule that Amazon's asking for. The company is 10 billion, but they were worth a lot more. Look at their chart. When they IPO'd, they were worth 13 times more than what they're worth now. Wow, what a drop. And at one time when these guys IPO'd, of course, Tesla is the most valuable car company on the planet. And at one point, Tesla was worth more than all the other companies combined that were publicly traded. When Rivian came out and they had this big market cap, they were the second most valuable company on the stock market. And I think at that time they had produced 3 or 4 cars and delivered them. And they were more valuable than Toyota or Ford or GM, which was kind of surreal. It's like, wow, are you kidding me? But that was life. So they're 10 billion in market cap. They have 5 billion in revenue. That's not too bad because they're a growing company. They're not profitable yet. They don't pay a dividend. Analysts are saying, hey, it's undervalued. It's being priced 69% less than the stock price they expect. That's interesting. Looking at their growth, wow, look at these numbers. 2,914% growth in 22 because they were so little in 21. And then they grew from 1.6 billion to 4.4 billion. So obviously the growth is tremendous. Let's look at the quarterly. Most recent quarter is March 31st, growing at 82% if you compare that quarter to the prior year. Explosive growth, undeniably. All right, cash flow. They do not produce free cash flow. They are burning cash. And let's see if that's going to be a problem. So they're burning, this is annual, no, this is quarterly. So let's switch that to annual. So at the rate that they're burning cash, about $6 billion a year of cash burning. All right. So what's the balance sheet look like? So balance sheet, they have about 7.8 billion in cash, and then short-term investments, 1.5 billion. So altogether, $9.3 billion of cash. And they have a little bit of long-term debt, 4.7 plus 361 million. So collectively, they're at 5.2 billion dollars of debt. So we just saw that they're burning 6 billion a year in cash, right? So, okay. And they have about close to $10 billion of cash and about 6 billion of debt. So they have roughly about a year of cash to operate without any issue. I can tell you they're not going to, like, my valuation that I based on free cash flows wouldn't work in Rivian because they don't have free cash flows. My second valuation method is earnings per share. Well, that doesn't work. Why? Because they don't have positive earnings per share. It's all negative. All I could do is give you a zero. My models don't work around this. So it's about really understanding the business. And if you like the business and really believe in Rivian, it could be an investment that you can consider. The piece that I would want you to take a look at and take for homework is how much cash they're burning, what they have on their balance sheet, how long can they go? Can they go for a year, for 5 years? At what point will they have to issue more debt or ask for, issue out more stock? That's potentially a play for them. For me, it's not the right investment. I think the car business is not like other technologies where the car business, you have to make a big product that has a lot of moving parts, a lot of engineering, people involved, distribution. It's just a hard business. You have a lot of competition. It's wow, look out. As opposed to a new business, like let's say Uber, it's a very simple business. It's growing really fast. It's already producing free cash flow. They don't have to produce any products. They just have to make their platform the best platform on, anywhere for ride sharing or food delivery. So with choices in the stock market, whether you buy a manufacturing company like Rivian, or you buy an Uber-like company or an Airbnb or some other type of technology company that has a simpler business that's going to be more profitable, that's your choice. There's no accident that when you look at the top most valuable companies on the stock market, the biggest companies on the stock market, including Microsoft, over 3 trillion, Apple, Nvidia, Google, Amazon, Meta, none of these companies produce a big giant product like a car. They all have technologies that scale very quickly and basically don't cost very much per incremental unit to deliver. In the case of, let's say, Google Alphabet, how much does it cost to run Google search, right? They have billions of people using it every day. And that's where I want to, come back to Rivian. Those businesses are far more equitable, or not equitable, but profitable. And as an investor, we get to choose. We don't have to buy car companies. We don't have to get into businesses that are super hard. We can invest in the businesses that are going to make us lots of money. Okay, so we have Rivian on here. Now let's talk about NIO. NIO is a high growth Chinese automotive company. They have a market cap around the same amount, 10 billion. If we look at their 5-year chart, boy, they were rocking 61.95 back in 21. Now they are, look at the theme. They're about 11 times smaller. Woo. So I think Rivian was about 10 or 11. Their revenue is a little higher, almost 8 billion compared to their market cap. Okay. Forward PE, they have a positive PE. That looks good. Let's take a look at, see their revenue. I thought it was going to be higher, frankly. Very high growth. Well, not crazy growth like Rivian. They've been around longer, about 13% growth in 2023 quarterly. Their growth is slowing down. You see that? Okay. We look at their cash flow. They are not producing free cash flow. They're burning a lot of free cash flow. They're burning 15.6 billion. Is this in dollars or let's see here? No, this is in the Chinese currency. So I don't have that converted. So if you look at this company, you'll have to convert it. But I think it's, I don't know what the conversion is. So that negative cash concerns me because their forecast, their earnings per share, in 24, the earnings per share is expected to be lose money. And in 27, they start making money, earnings per share. So both of these investments are not something that I would want to get into. I just want, if this was a business that was simpler and this company had a huge advantage technologically, then maybe. But with the car business, no, thank you. I've got other choices for investments. So that's my opinion on it. Just one guy's opinion. And I really appreciate the question. Two really interesting companies. All right, let's move on to Cinema Topographers. Good to see you again. Thanks for coming back. Cryptocurrency News, JP Morgan. Oh, so they're getting into the spot ETF. Great. Jamie Dimon, a month or two ago, he couldn't say enough bad things about Bitcoin, but I guess the market is going to be too much to resist. What is your opinion on CAT and DE? Yeah, those are good ones. So let's take a look at those. I like CAT, and I think DE is deer, right? So so just before we jump in here, industry-wise, Caterpillar is, they do heavy equipment, big earth movers, big machines that do big things, in construction, agriculture, so all that type of thing. So this is a huge industrial company, and they've been around for a long time. So good company. $176 billion in market cap, $67 billion in revenue. They pay a 1.4% dividend. Analysts say that it's priced at a premium of about 10%. Forward PE of 16.5. All right, so these guys have been growing very good. And this kind of shows me that, from an economy perspective, for the last couple of years, we've heard of this recession that was supposed to come. Caterpillar grows when there's construction and that type of like big project activity going on, and they're buying big machines like Caterpillar produces. That's Caterpillar's market. So it's good to see that. Looks like the most recent quarter was close to flat, just slight negative. Cash flow, they produce $10.5 billion of free cash flow. Woo, that's nice in 2023. And it really increased. The year before it was around 6, and then 6 before. You can see that their run rate's more around, 5 to 6 as opposed to the really nice year they had in 2023. Their balance sheet, they have cash and cash equivalents of about 7 billion. And how much debt do they have? They have current debt 13.4 plus 24.4, so that's 30. Call it 38 billion. All right, I think that's pretty reasonable because if we look at their EBITDA, they're going to be less than 3, I imagine, because they probably have a big EBITDA number. Debt to EBITDA 2.27. Yeah, that's what I figured. So balance sheet's good cash flow. This is a good, like we talked about Dow in my opening where I'm talking about the Dow here. Caterpillar is an example of what's a Dow stock, and so is John Deere. So I like Caterpillar. Let's take a look at John Deere real quick and see which one looks better, because it's good to see two companies in an industry because you can see, hey, which one's a better buy? Which one's a better purchase? I'm seeing that Caterpillar is a very well-run company, good company, but would John Deere give us a different market cap? So here we're looking at, let me see if I can reduce the window here. All right, so here's our page on Caterpillar, and here's Deere. So John Deere is a smaller cap company, but they have almost as much revenue, just 6 billion less in revenue, but their market cap is $60 billion less. They pay about the same amount in dividend. Interesting. Analysts say, hey, the stock is discounted by about 5%. All right, so from a growth perspective, also growing nicely year over year, quarterly. They also had a slowdown in the most recent quarter. From a cash flow perspective, they have positive cash flow of 6.1 billion, and they've had years, all over the place. So they go from 1 to 355 million, 1.6 billion, 6.6 billion. So they're kind of all over the place, but their more recent years, 6 billion. All right. So these guys here, I would say both of these companies are going to be either slightly discounted, fairly priced, or slightly sold at a premium. And what I would be concerned about is if we have a slowdown in big, construction, big projects, then these guys are going to have a hard time, selling more product. But both of these companies are Dow components. They're going to be probably around fairly priced, and are both very well known names. All right. So good question on Cat and John Deere. I don't own either, and I don't own these types of investments. The closest I come to within their sector is 3M. That's an investment that I like, and it's a rebound story, but they've been doing really well. So within this sector, 3M is my stock. All right. So thanks for the question. That's Earthbound Misfit. Thanks for showing up. Appreciate it. All right. Cinematographer. Look at Micron. Let's do it. Micron is on fire. So these guys, so Micron does memory and storage, compute, mobile. Long story short is Micron is one of the components that you're going to need for the big build out for AI, as well as data centers. And they have been riding the wave of AI. So when we look at their stock price, they have really benefited from the AI build out. You see their stocks up 98% in a year. Now, Micron is not, like NVIDIA, where NVIDIA is just going parabolic, but they've had a huge rise. We look at their market cap now, they're 141 billion. So at this rate, they were a $70 billion company 12 months ago. And now they're double. They have forward P of 46, really not a dividend. And analysts say, hey, it's priced by a slight premium, but they say strong buy probably because they're like, with the AI build out, Micron is probably going to be a company that's really going to benefit. I agree with that. Looking at their growth, interesting. They went from 30 to 15. What happened? That's interesting. Why is there a big drop there? Let's go to the investor website. Sometimes when I go to a platform like the one that I really like using, some of the data isn't correct. And a number like that makes me think, well, is that number correct? So let me take a look. Here's the Micron Investor Relations website. Let's see if I can find my way around here. Okay. I'm trying to find the 10K that would tell me last year. These guys don't lay out their website like other companies, but here we go. I think we're getting somewhere. Here's the 10K. All right, so here's, yeah, the revenue. Look at that drop. Why did it drop so much? Huh. That would be a homework item for anybody that's interested in Micron. What happened? Why did it drop so much? We just confirmed this data is correct. All right, so now if we look at the most recent quarter, they're at 5.8 billion. And if you compare the same quarter a year prior, they were at 3.6 billion, representing a 57% growth. Very good. That's good growth. All right. Cash flow. Last year they did. And what I'm going to do is I'm going to go trailing 12 months. And if we look at trailing 12 months, cash is negative. And cash was negative last year. Man, there's some big open questions on Micron. I'd want to get those questions answered. What's going on? Because you're dealing with a couple of, I consider, concerns. One, the stock has doubled in the last 12 months. Okay. Is it priced too high? All right. Well, let's look at the fundamentals. Well, the fundamentals don't look right. You got negative cash. You had a collapse of revenue. Okay. Those are big, big concerns. I'd want to get my head around those two big factors before I invested. The way these fundamentals look, the stock should not have doubled. The stock should be down like 50%, and it should be a recovery story. But they're part of the AI build out, so they're getting a lot of interest, and people believe that they're going to really grow. So that's what I'm seeing out of Micron. I have noticed their stock has just been on fire, so that's why I was like, wow, they're probably going to show just fun, really good numbers. All right, PT. You did have a valuation on Hood. Yeah, so let's talk about Robinhood. So you point to a good thing there. So I did a video on Hood. I believe it came out, and I was holding on Hood. And at the end of that video, I said, hey, I'm going to start buying Hood because they're doing really well. Combined with, that Roaring Kitty guy came back and started commenting. So GameStop went off the charts, and I was going to talk about that. I'll talk about it later. And that in itself gave Hood some fuel to go up. So that's nice, because recently when we look at their stock, it kind of was coming down, and then it went back up. I think with the whole meme stock craze, the company is really good. Robinhood is a $16.2 billion valuation. You're paying 8 times revenue. They have a forward P of 44. They're profitable, which is good. And why do I like Robinhood? From a business perspective, a company perspective, they're not trying to be like Merrill Lynch, but better. No, just throw away that business model. We're not doing that. We're doing a brand new business model. They broke, like the brokerage business model of charging fees, very high fees for trades, and they came in with zero cost trades. Just turned the industry on its ear. Everybody had to follow Robinhood. The little guy was telling the big guys what to do. And they really are focused on the younger investor, the way that they like to invest. You look at their growth, they have good growth in 23. We look at their cash flow. Let's see here, that's trailing 12 months. Let me get rid of trailing 12 months. So they have $1.1 billion of free cash flow, and they're a young company. They're growing nicely at their top line revenue at 37%. In 22, I give them a pass because the market was so bad. You can look at any financial services company and they all look bad because the market was down. But their growth in other years is phenomenal. So they have a very good business plan that's unique. They have competitive advantage in the market they're trying to go after. They're generating free cash flow. I like it. So my valuation of the company actually looks really good. And you can watch a video. I think it released today or yesterday, but I have them at a 54% discount. It's a good valuation. It's a growing company. This is a growth stock. We were talking about Rivian earlier. That's an exciting company and make cool cars. Robinhood's an exciting company and they make a lot of money. That's what they make. So I'm a buyer of Robinhood, and I already have a nice position of Robinhood. Here is Robinhood. I'm up 85% on the stock. I've invested $11,398, and my stock's worth $21,000. So I'm going to keep buying Robinhood. It's a good company to have, and glad to buy more shares in that company. Thanks for the question on that. All right. So Josh, thanks for tuning in. Appreciate it. Brian Silva, Baba. All right, let's talk about Baba. So, some companies, I think they're kind of guilty until proven innocent. And Baba is one of those companies where it's like, okay, let's not give them the benefit of the doubt. Let's doubt them until they prove otherwise. Because the earnings, what I liked about it is they grew their top line. Very good. That's what we want all businesses to do, is keep growing, because it shows that customers like them. They're doing the right things and growing in the right industries. Now, when you look at their free cash flow, it went down because they were investing in their infrastructure business. They have a cloud business similar to AWS, Amazon Web Services, and that's a very profitable, very strategic business. Having said that, the market punished them for spending money on a very strategic, important, valuable business. I looked at their earnings and said, I like Baba, but the company doesn't get valued fairly. It's a $202 billion company, $130 billion of revenue. These guys are in technology, and they're focused in obviously China and then surrounding countries around China. And they actually are a global company, but predominantly they're in the China and Asia market. Having said that, like many analysts, I think that they're discounted. So I am accumulating Baba, and the reasons for it is at some point they're going to have to get a fair valuation. But until then, I got to be patient, because they're just never going to be valued like an AWS. I've invested 24,000. My investment's worth almost 24,000. So I lost 2%. They pay a small dividend, and they continue to be discounted. I'm going to hold those shares, but I can see myself buying Baba if it dips. And I think that's the story on Baba. I'm not the first one to say it. Their fundamentals look great. They're doing the right things. I like their management. I love their business. I like that they're in China. It gives me access to investing in China. It's my only Chinese play. So I'm big on Baba. Good question. Thank you. All right. Let's turn our attention over to Jake Samuel. What are your thoughts on Universal Studios stock? They are currently building a new theme park in Orlando. GameStop, AMC. moved a lot. Yeah. So I think Universal Studios is owned by Comcast, and I'm a big Comcast fan. I think Comcast is a good company, and I'm buying more shares of this company. I'm a stockholder, building a larger position. These guys are very much like Disney. Disney and Comcast are very similar. They have theme parks, they have a movie studio, they have a streaming service, a lot of things. The difference being Comcast does have a broadband business on the East Coast of the United States, Infinity or Xfinity, and they are a very well-run company. I've owned Comcast for multiple years, got out of them. I got out of them before they went on this downturn. And now that their stock's really nicely discounted. So I view Comcast as being discounted. And, I'm a buyer of Comcast. I'm building a position because I like their dividend and I like the fact that they produce good free cash flows. They haven't had all the drama that Disney has had. Here got about a 31% discount. They pay a nice dividend. And they don't have all the drama that Disney's had. Disney has had way too much drama. And these guys are very similar to Disney. All right. To Tommy, good to see you. Good to have you. And looks like you have a question on WHR, which is Whirlpool. So Whirlpool more recently has scared me. And these guys are what I consider like the leader in appliances, no doubt. But when you look at their financials, the picture doesn't look good. The picture actually looks bad. So the company is down over the course of a year. They're down about 26%, overall 32% from their high in 21. They pay a very high dividend rate. I don't know for how long they're going to be able to pay that. Their financials. So their revenue's been going down. Understandably, they sold a lot of appliances, after COVID. Okay. But you see a lot of red here, right? Okay. That's concerning. Cash flow. If we look at free cash flow, not very good. 366 million. Last year, 820 million. For a company that does $19 billion of revenue, they only have about 6% of that ending up, actually 1.5% ending up as free cash flow. That's very weak, and it's been going down. So when I look at those fundamentals and I try to value Whirlpool, I can get nowhere near their market cap. So that's a big concern. Their balance sheet, 1.5 billion in cash and cash equivalents, long-term debt of 7 billion plus another billion here. So about 8 billion, right? And I think their balance sheet's going to be all right. I think debt to EBITDA. No, actually it's not. Close to 7. I like it below 3. So there's just too many things going wrong with Whirlpool from a fundamental perspective. I think that it's a good company. I think they produce good products. I think people trust the brand, like the brand, but the fundamentals to me look bad. So that's why I'm staying away from Whirlpool. Thoughts on Lumen Tech? Oh man, this is a bad situation. So Lumen Technologies, not good. So we're at $1.30 per share. They used to be, in the teens. So they are way down. And I haven't looked at them in a long time. Looks like their forward PE is 20, not bad. The revenue has really been just going down year after year. That's a problem. Cash flow, negative cash, some cash last year. Okay. This one here, and I think they have a fair amount of debt, if I recall. Long-term debt, 20, call it 20 billion. And their cash is about 2.2 billion. Okay. So Lumen is just a really high risk company. Are they going to make it? Are their assets worth, a lot? So that way somebody else would acquire them. They don't even have a debt to EBITDA ratio. So they're not paying a dividend. So, if you think Lumen Technologies is going to make it and they're going to be a viable business and they're going to be around in 5 years, you can make quite a return, because the only way that it can go, if it's a legitimate business, it stays in business, the only direction it has to go is up. But if they go bankrupt, then you got close to a complete loss, if not a complete loss. So it's a high risk endeavor, in my opinion. And I'm not an investor in Lumen. Yeah. So PT. So thanks for your question. Hey, Victor, could you teach us how to build a Google Sheet portfolio tracker in your future videos sometime? Absolutely. So if you go back about 3 weeks, there's 2 videos I produced specifically trying to answer this question. And I really probably filmed those videos and took twice as much time to go step by step. So take a look at it. I think one of them is Ternium, symbol TX, and the other one was right after that. So just look for Ternium. On top of that, in the last live stream, people asked, "Hey, can I publish my spreadsheet?" And the answer is yes. I'm close to delivering that via Google, Docs, where I could share a file. Give me a couple more days, and then I'll announce it on the channel community page. And then you can download my spreadsheet just as a good starting point. When you build I like how you phrase your question. You're going to build your own. That's a great idea, because when you build your own, you really understand the math and the calculations. You're going to be a better investor, because you really understand what's driving the mathematics, the arithmetic. And then when you get into the financials, what's driving the financials? So you have really good understanding of the model, the math, and the company fundamentals. So that's the right way to approach it. If you just took like a calculator, right, and you put in numbers to multiply, divide, do all kinds of functions, you're going to get an answer, but you may not know the logic and how the answer was derived. And in investing, you really got to know those things, because in that is really could be, the reasons why you want to invest or the reasons why you don't want to invest. So good question. Stay tuned. I'll put it out there. And then, what we could do, I'll keep producing videos that hopefully are good lessons, to somebody who's putting together a valuation model. Keep the feedback coming. I'll continue to adjust and react to what people are asking for. All right, Random. Good to see you. Thanks for tuning in. Found 3 very interesting stocks: DLO, IBKR, HCI, and then Crocs. Okay, so I've looked at Crocs recently. The other ones are kind of new to me. DLO Local Limited. So these guys, payment processing platform. Okay, so they're a payment platform. They probably compete like PayPal, and it's not Square anymore. It's called Block, and then some others that are Stone Code down in Brazil. Wow, they dropped 26%. Whoa, what happened? So they dropped off a cliff here. They had really gone up fast back here. August 2023, they just took off. So they're a $3 billion market cap, about 700 million in rev. Not too bad. It's about 4 times revenue. Forward P of 16, not bad. Analysts are saying it's 81% discounted and you should buy it. That's what analysts say. High growth. Growth looks good. Cash flow. Cash flow looks good. Very good cash flow. So balance sheet, They have 638 cash equivalents, not a lot of debt, 3 million long-term debt, less than $1 million there. So no debt. Very good. So what happened? What happened with these guys that they fell off a cliff here? So dLocal investor relations. So dLocal. All right. So payment volume up 49% year over year. This is yesterday. Okay. So high growth. Good. Gross profit didn't go up a lot. Okay, that could be a concern. EBITDA went down. Okay. These guys are down in Uruguay, down in South America. Okay. So their transactions went up 49%. Revenue went up 34%. Gross profit did go down. Okay, that could be a concern. EBITDA did go down. They're also in Africa and Asia. All right, so this is in US dollars. Good. So here's 3 months. So what I'm in disbelief around is if you're growing that much and you didn't, come in at the profit levels that you needed to, okay, that could be a problem, but not the stock's down 26% in a day problem. Okay, cash flows. So here's the statement of cash flows. And this is 28 million. Actually, the cash from operations 43.5 billion. And then they have less than $1 million in capex. So call it $42.5 million in free cash flow for the first quarter, which is good. So I think this one here, I don't quite understand why the stock is tanking so much. The fundamentals are going to look good, but you'd have to examine it and see what kind of risk tolerance you're willing to take. The things that are concerning are from a, just high level, it's a small company, risk. It's down in Uruguay, risk. So it's, I'm in the US. And so those two factors, okay, I better be getting a really good discount. And this better be a really good story. I wouldn't touch this because I already own StoneCo, and that's down in Brazil. I'm good with StoneCo, but this looks fundamentally, this looks pretty good. I don't understand why it's being sold off. So earnings were disappointing. Okay, I get that, but 26%. It might be that earnings were disappointed, and since they are like small company, down in Uruguay, it just got beat up. It just got tanked. So interesting one, random. Okay, next one is IBKR. Interactive Brokers. Okay, I've seen this one before, and the fundamentals look good. I can't take another financial services company. I've got a very good, list of stocks. I'm good. Robinhood is my number one, company that competes against these guys. But if you look at their fundamentals, they look good. The stock's really up, deservingly. $51 billion market cap, 18 forward PE. Who cares about the dividends a little? Strong buy, but the stock is currently, fairly priced. You look at their growth, very good growth. It's market driven. We're having a good year. We had a good year in 2023. We're having a good year in 2024. Cash flow, they cash flow well, 4.4 billion. So this is a good company. They're, having a very, very good run. And if you're looking for a company that's in financial services, Interactive Brokers, I think they do brokerage. They have runner brokerage and so forth. This is a good company. I'm in Robinhood. I like the Robinhood story, and I don't buy too many of the same companies. And this could be a good investment for somebody else. All right, HCI Group. HCI Group, together with its subs, engages in the property and casualty insurance management. So insurance is pretty red hot. You may have heard that, Berkshire Hathaway is invested in Chubb, which is an investment company. This is a small cap, $1 billion. They're $628 million in revenue, low forward PE, very good, 1.5 dividend, supposed to be discounted by 29%. So this is a small company. So there's a risk that it's a small company and it kind of the stock never goes anywhere because it's too small. Very good revenue growth, man. In the quarter, 60%. That is very good. So very good revenue growth. Balance sheet should be decent because they don't need a lot of cash. Excuse me, they don't need to invest in a lot of expensive equipment or anything. So cash 540, debt, total debt's 209 plus, that's it, 209. So they have more cash than they do debt. Very good. They produce very good free cash flow. This one, fundamentally, you can prove it's discounted. The things that are, a concern are it's really small. So who's ever heard of HCI Group, right? Not a lot of investors. So the stock has done really well for the last year. Very good. Will it continue? I don't know. If they have a differentiation in the market, like, hey, they provide a particular type of insurance, nobody else wants to provide it. These guys do it well, and they're very profitable. Maybe. For me, I'm in Allstate and Prudential, and I'm good. I've done well with those two stocks. Those are recognized companies, Allstate especially. It's on a rebound year. I'm not up 80% like this, but I'm doing well, and it pays a nice dividend. Prudential is actually at a better return, and it pays a really nice dividend, above 4%. These are interesting companies, Random. You've been doing your homework. Nice. Crocs is going to value well, and I'm going to start with Crocs here because I think I have a spreadsheet on them. So Crocs is similar to the story that I just told on small businesses. Crocs is discounted. Why am I not invested in Crocs? Because I think Crocs investors don't take it serious. It's not like a company that's taken very seriously. And I don't mean to disparage the company. I'm just trying to share with you my observation. So this company went up, down, and now it's kind of gone up. 1 year, 23%, very good. Year to date, very good. Now, my concerns around Crocs is, is it more of a fad shoe? Can they really establish a long-term growth trend? So I couldn't completely buy into the Crocs business, but I'm a buyer into the Nike business. So that's what led me to invest in Nike and not Crocs. Their fundamentals look good. Crocs, 11 PE, very good. Very good growth. Very good cash flow, if I recall. So if you believe in Crocs as a company and you think this is the company I want to own, the fundamentals are going to show you that it's discounted and it's a good company. So that's my opinion on Crocs. All right. Random. Thanks for the questions. So Micron saw a revenue drop like any other memory company. It's cyclical. Very good point. It's a very cyclical business. At the same time, it's like, wow, that's a big drop and a big drop in free cash flow. So that it still concerns me. It's because the stock price doubled. If the stock price has gone down, it offers me a discount. Maybe the concern goes away. All right, Ed Woosley, thanks for joining. Let's look at VUZI. And I've never heard of this company. So this is Vuzix Corporation, together with its subs, designs, manufactures, markets, augmented reality, wearable display, compute devices, North America. Okay. They're a $100 million company, tiny. Revenue's $10 million. They're tiny, so it's very small revenue. They have 26 million in cash. I don't think they have any debt. No current debt, long-term debt, very little debt. And they are burning cash in the last 2 years. So this company is tiny, and it's, if you know something that the investing community doesn't, like, oh, their technology is going to go into some catalyst, like it's going to be put into Toyota cars, and 1 million Toyota cars are gonna now have their technology. If you had some sense of something like that happening, that might be interesting. But for me, it's just a tiny company. I don't know that the stock's going to go places. It's been going down for a while, so it'd be a tough one to get my head around. Thanks for the question. Random. Micron stock went up because they reported huge profit, although they were supposed to turn profitable next quarter. Okay, cool. Good to know. Neil Weston, thanks for tuning in. They had troubles in China. I lost a train of thought on that one. Micron margins have become somewhat narrower. Debt has also increased. Perhaps they made investments somewhere. Could be. Yeah. I think, the semiconductor space, last year I had Broadcom, and I was beginning to invest into Qualcomm, and I'm an investor in a Taiwanese company. And I began to get really concerned because, so the 3 stocks that I'm owned right now, mostly Himax, which has recently done well, a little bit of Intel, and then Qualcomm, which has done well. But I had like $80,000 of Broadcom going into the latter part of 2023. And with all this like hype, I saw Broadcom stock just go through the roof. And I'm like, I'm going to take the money and run. And I cashed in that position because the semiconductor industry is cyclical. And you see these boom periods, but then you see the bust periods. And if you stay in the party too long, you can really get hurt. And I like what Cramer has to say. I know Jim Cramer is loved and hated, it seems, by some people. I like how he says, pigs get slaughtered. There's some truth to that. Is if you stay in a position too long, and I can tell you positions that I stayed in too long and just got slaughtered. I didn't want that to happen. Now, I would admit that selling Broadcom was, I sold it too early. I probably left 30% on the table, but I'll take the big gain that I had prior to that. All right, so next one. Random. Yep. So looks like Micron's been investing. So yeah, I mean, if you guys believe in Micron, I mean, there's the stock's been rallying for a reason. I'm not getting it. It's not the right investment for me, but I'm just one investor just voicing his opinion on it. And then, all right, You get some cheers random. Robinhood. So it looks like you're saying that Robinhood is also in crypto. You are correct about that. And they're doing quite well with it. Josh Samuel, when you get a chance, can you tell me about your thoughts of C3.ai? I hear people saying that AI will shoot up over the years. What are your thoughts? So C3.ai, C3.ai. So I think these guys wow, that's surprising. I would have thought that their chart would be like up and to the right. So what's going on? So market cap of 3 billion, revenue of 300 million. Now they lose a lot of money, which is interesting. They have been growing. Okay. So they lost a lot of money. Did they have this huge write-off or something? So they're burning cash. So they're burning cash and they're losing money. They have 444 million on the balance sheet in cash and cash equivalents. And they have no debt. That's good. So this one's where if you believe that C3.ai has technology that's really going to play well and be competitive, it looks like you can probably get a company that's fairly discounted. But I don't know enough about AI to be able to make that kind of decision. I have to, first believe in the company. I think they're in a space that potentially is going to be huge. And by the way, my opinion on AI as a marketplace, it's going to be huge. It's just not going to be huge in 2025. It's going to be huge in like 2027, 2028. You might see some breakthroughs appear in 25. I mean, what have we seen so far other than you can go to ChatGPT and ask questions and have it write a document for you, and students can go and kind of have it write an essay and so forth. Okay, those are impressive. Gemini can do the same. But beyond that, where's it going to be like really transform things? For example, you do call into a call center and you have a natural voice driven by AI interacting with you. When's that going to happen? In a year? In 2 years? In 3 years? Well, when you can show me that, I'll be excited. And what about other use cases? Show me other use cases. Not a lot of real specific use cases have been shown from my observation yet. Just everybody's crazy about it. Everybody uses like the same language, which is, oh, it's going to change everything. Well, that's an easy way of not having any specifics by just saying it's going to change everything. Okay, give me some specifics. Let's get into the sciences. How is it going to change the way that a biotech company is going to work? Give me a couple of specifics there and show me a real life use case that's happening in 24 or something that's happening now that's supposed to have a payoff in 25. That's the level of specific examples that I'd like to see before I can tell you who's going to win or lose the AI race. I'm not arguing that AI is not going to be a thing. I'm not arguing that it's not going to be a big thing. What I would say is that when the internet came out, I'm 55. So in the mid 90s, the internet was nothing what it is today. And it started becoming something, and people were excited about it, as they should have been. And the companies that were leaders then are nowhere to be seen now. So kind of like the early companies all disappeared. They became irrelevant. They were leapfrogged by a competitor. A lot of things happened. And now we know that the big winners are Alphabet, Microsoft, Meta, to some extent, Apple, although Apple was around before the .com, the internet. But there are some big companies that started and were born when the internet began to explode, like Meta, Alphabet. Those companies didn't exist. Uber didn't exist. Airbnb. So if somebody could tell me these are the 5 companies that are just going to be the big winners of AI and give me some specifics, that'd be great. But I don't think anybody can right now. Sorry to go on long-winded on that. Ex-dividend. The whole China seems to be discounted at the moment. Yeah, I agree. We'll see if that changes. Probably won't change very, very, very quickly. All right. So I think we were talking about Universal Studios on that one. Neil Weston, do Whirlpool buy its shares? Do Whirlpool? Do they buy back shares? I don't think so because I think they're low on cash. Hey, thank you, Teutonomy, for your questions. Really appreciate you tuning in. Yeah. So Lumen Technologies, one of the other things it has as a headwind is interest rates have gone up and they have a lot of debt. So that means they have to pay more interest. So they just have a lot of problems. And I hope they make it. I hope they make it because then all people that work there get to keep their jobs. Estee Lauder companies. So Estee Lauder companies, ISIN, US, too much debt, but they have always been share buybacks in recent years. The dividends also regularly increased, profit margin. Interesting. So makeup, huh? Can't say that I have a lot of expertise in that area. I don't have access to their financials. I think it's a French company, if I'm guessing right. It seems interesting, and makeup is one of those things that it could be very profitable. I know, so if you can break that down and you think it's a good company to buy at the right time, might be a good investment. Brian Silva, do I look at European companies? It's not my principal investment because I'm in the US, but I have bought Ternium is headquartered in Luxembourg. And, I'm not opposed to buying a European, company. I'm trying to think of another European company that I own, but I can't think of one right now. But I mean, it's pretty much what I like about, especially, the companies out of UK and France and Germany. Financials are very easy to follow because I think they're pretty much put together the way US companies put their financials together. So I'm not opposed to it. If it comes into my wheelhouse and it's a good company that I like, totally comfortable doing it. And then I buy bonds, and I bought bonds with European companies, by the way. Looks like there was a recovery stock we were talking about. All right, cool. All right, looks like Dylan Milton. Thanks for tuning in. Yeah, I gave you an opinion on Comcast a little earlier, and then Epic Universe. I've never heard of Epic Universe. Do you have a symbol on Epic Universe? Nope, don't have it. Yeah, if you have a symbol Epic Universe, it'd be great. All right. Neil, thanks for tuning in. Thanks for all the comments. Dylan, okay, cool. Yeah, I agree with you that Comcast is better than Disney. The fundamentals are better. Disney's just been kind of a soap opera, a lot of drama, a lot of problems, in the headlines for the wrong reasons. Comcast has just been operating, making money, growing their business. Oppenheimer was one of their movies. They did well with that. All right, random. Paris looks cheap. So what is Paris? Korean Network provides digital advertising solutions to brands, agencies, and publishers in North America, Europe, internationally. So it does content monetization. Okay. Very small cap. So this is a tiny small cap, less than the revenue. And forward P is 9.5. They've been growing. Okay, good. Cash is 474. Current debt and long-term debt very low. And cash flow, they produce free cash flow. So this is going to value well. It's just a matter of, is this going to be a company people have heard of? Are they going to rise? Or is, the typical investor going to be like, yeah, they're too small for me to invest in? These big hedge fund managers, if they buy a very well-known name and it doesn't work out, it's bad. But if they buy a company that nobody's heard of, like Perion, and it tanks, they look really bad. They're like, dude, what are you doing? Like, you're investing in a high-risk company and nobody's heard about. It tanked. We lost 40%. You're not a very good hedge fund manager. So be careful when you invest in it. I think your expectations of where the stock's going to go, you got to just, understand it's a very small business. Jake Samuel. So we looked at WWE in about a week ago, and I think we looked at WWE and their competitor, and I forgot which one was better than the other. I'm going to guess that it was the other. WWE. Oh, what's going on here? WWE. Why am I not finding it? TKO. That's it. That's why I was thinking there was a different company involved. So are we talking about the right company here? TKO? Did they merge? And I believe these looked interesting. TKO looked interesting. That their, I think their stock is moving up. I think the 1 year, just 3%, huh? You had a pretty big collapse, and then it's been rising. Up 30%, 8.5 billion, forward PE of 41. They're growing nicely. They're producing free cash. So I think this one looked good. And, if you really understand there's this industry, like I'm more of a fan than versus understanding this. This seemed interesting. It seemed like, hey, if you really believe in the business, you can probably substantiate the fundamentals and really have a reason to own the stock. All right, so I'm going to kind of breeze through these. We've been going for about an hour and a half. Great stuff. Thanks for all the questions, everybody. I just I wanted to go about an hour, and let me see if I can pick out any comments. So we're talking about Comcast. Good chat around Comcast. Glad we talked about that company. And okay, so good stuff. Hey, everybody. So thanks for all the comments. Great session today. And we covered a lot of ground. The market's up. We had, some short squeezes kind of take off a little bit. And, the GameStop thing was interesting Monday and Tuesday. It really drove some stocks up for me. It drove up Zim, which I wanted to show real quick. This is a stock that I've owned and really felt that they were oversold. Everybody was expecting that shipping rates were just going to collapse. But it's really nice to see that, hey, I was a contrarian just because I thought it was overdone. And I'm glad that I bought into it. I don't know if the short squeezes had put a little extra energy into Zim, but that happened. And then MPW has also been really taken off recently, which I've been watching, and I'm a stockholder of MPW. And then obviously GameStop's been on a tear, which was been fun to watch. All right. So yeah, I appreciate you guys. Thanks for tuning in. Coal stocks like AMR. So I'm not into coal. I invest in Chevron And the oil stocks, I'm into obviously Chevron. That's my position there, and that's where I invest. And I'm going to keep a couple of these. I'm not going to analyze them. Maybe we can analyze them next time. And this will be the last comment I'll come back to. So do I think the market will crash or correct? I think the market's going to correct. It's not going to crash, I don't think. And as we look at the 5-year chart, like in 22, the market corrected, right? So that was a pretty good correction. I'm going to get rid of all those charts, but just go to the S&P. So this was a correction. Now, are we going to have a 2022 like correction? No, I don't think so. I think we're going to have more like one that we saw in 2023, where it was about a 10% correction, maybe 15. Okay. That's my guess. But this is called a crash here. COVID gets announced, and all of a sudden everybody knows, okay, we're going to be quarantined, and it dropped 31%, the S&P, in less than in about a month. That's a crash. We're not going to see that unless another big negative thing comes out, a black swan event, as they call it. We're not going to see as severe as 2022. We're going to see these are normal. When you see these pullbacks, it just means the market's getting really pricey, expensive. Okay, let's correct. And then it starts building again. You see how we have this head fake here? Well, as we approached, let me see if I can go. No, it doesn't let me do that. But as we go up, see right here, it had kind of a similar head fake where it went up and then it kept going down. So we may see something like that. We'll see. And it could keep going up and keep setting other highs. But what catalyst is out there to say the stock market ought to be priced 20% higher? What's out there? Okay, we're seeing that the AI trade is getting a little tired. My observation. What else is out there? I don't see anything else out there that's like, hey, everybody's excited because of this other big factor on the market. Having said that, negativity can come into the market, and it could be hey, something else is happening. There's another conflict, or there's another causal effect that's going to drive prices down. We'll see when it happens. I think there'll be a correction, not a crash. All right, everybody. Thanks again for tuning in. Great session. As we end things, just a reminder, I'm going to be interviewing Scott from Scott's Due Diligence on Saturday. Please tune in. Scott's awesome. I've been watching his channel for 4 years. I learned something. I've learned so much from him. And I'm hoping to take him through a kind of a flow of questions that young investors are going to get a lot out of. And I hope every investor gets a lot out of it. So try to tune in on Saturday. I think it's going to be a really good interview of Scott's Due Diligence. And we'll jump into some examples during the session as we can. All right, everybody. Have a good night.